Welcome back. The European Central Bank has cut interest rates for the first time since 2016. We'll find out shortly if that's good news. It has also said it will start printing money again and said it would continue to purchase for as long as was necessary. This is all part of an effort to kickstart the Eurozone economy and stave off a recession. Well, let's bring into this conversation Jonathan Davis, economist and wealth manager from Hertfordshire. Jonathan, very good afternoon to you.
And to you, Rob.
Jonathan, right. In layman's terms, what does this mean?
The European Central Bank, which covers the Eurozone and the Euro, notably the United Kingdom's not in the Eurozone, is going to literally print electronically 20 billion euros a month. That's a lot of money. And they're going to use it to buy failing assets from banks in Europe. The banks are having great problems keeping those assets on their books. So the European Central Bank is simply going to sweep them up and take them away from the banks so the banks themselves don't have any problems with them. It therefore means that, in effect, at the government level, the European government level, well, they'll have a problem, but not the individual banks. What they're also doing is they're cutting further the base rate to a minus figure. It's now minus 0.5%, which I know sounds incredibly strange, but it follows from what's been happening in the lending world. In other words, when pension funds, hedge funds lend to governments like Germany, Spain, and so on, they are actually receiving already a minus interest rate. It's amazing. You as a pension fund lend, €1 billion to Germany. You actually pay Germany per annum for the privilege of lending.
No, that doesn't make sense, Jonathan.
Let me tell you, it's so ridiculous that there is a bank in Denmark, your listeners will love this, who are lending out mortgages on a negative interest rate. You literally borrow a mortgage and every year your mortgage goes down, but you haven't paid a penny. It's that silly.
Where can I get hold of? Anyway, listen, we'll talk about that later. Hang on. 20 billion euros being printed every single month extra. Part of me says that's got to be good news, more money in the system.
The system is, for want of a better word, it's bankrupt. Or at least it would be if they let it go bankrupt. And it's been bankrupt since 2007, 2008. But in 2008, the British government and the American government, in effect, bailed out our banks, but the European governments and the European Central Bank didn't do that. They didn't throw capital at the bad or failing banks. So all they're doing, just like they've been doing for the last several years of quantitative easing, which is money printing, they are just kicking the can down the line. It's like treating cancer by giving people aspirin. It kind of takes away the symptoms temporarily, but they are going to come back and with a vengeance. They haven't been printing money for the last couple of years. There are great problems in the big European banks, so they're doing it again. But it's not going to solve anything. It's just a temporary measure, and they're pretending everything's honky-dory. I can assure you that is not the case.
Are we immune from all this, Jonathan?
No, not at all. In fact, London is right at the epicenter because London is the number one global financial center. We straddle the three major time zones of Tokyo, London, and New York. 8 hours of the day, all the work, all the banking, global banking stuff is going on in Tokyo, then it's in London, then it's in New York. And we are by far the biggest. And there's a spider's web of connections between the banks, the central banks, globally. There is no way on earth that we're immune. On the contrary, we are absolutely at the epicenter of the whole global financial shenanigans.
But we're not in the Eurozone. We haven't got the euro. And more importantly, we should be leaving in 49 days. So if it affects the city, it won't affect normal people across the country, will it?
Until there is another banking collapse. And by the way, I'm not calling for one. I mean, if you and I spoke, say, in 2007, I was Dr. Doom. You may recall.
Yes, I do recall.
I was saying we're going to hell in a handcart, and then of course we did in 2008. But the central banks, this is the Federal Reserve of the US, the European Central Bank, the Bank of Japan, the Bank of China, which is also very important now. They are doing enough to stave off any immediate crashes. Problematically, and I've been saying this for 10 years, is that all they're doing is kicking the can down the line. And the more that they, for example, print money, and, we're talking about literally something of the order of $30,000 billion, euros, pounds, whatever, globally over the last 10 years, I can assure you that is hugely problematic. Someone in the future, and that means you and me and our children, we will pay the piper. Of that, there is no doubt. But for the foreseeable future, no.
Can't they just
all
keep
things are steady as she goes?
Jonathan, can't they just keep kicking it down the line for a few more decades? Just pass it down the line.
No, because what I, as an analyst, I'm seeing is that although for roughly the last 10 years, we've had extremely low inflation right across the system, I have been seeing for the last 2 or 3 years inflationary issues starting to creep back into the system. And I believe that over the next few years, they will start to hit more and more. So, clearly, for example, if you just print money, you pick up the pen that's on your table, say it cost £1. If you print money, then automatically it's inflationary. That pen is now £1.50. The more you print money, the more you kick the can down the line. Inflation is going to come back and bite us big time. Okay. And that, over the next 5-10 years, is when we could have serious problems because our currencies start to devalue materially. It therefore means that our costs of living and our costs of doing business will soar. Clearly, that's going to be problematic.
I'm still thinking about that bank in Denmark, which pays you to have a mortgage. I'll talk to you later about that, if that's okay. Jonathan Davis, economist and wealth manager.